This is the Bank Nifty daily charts. Massive red candle, one-way action yesterday. Um, Good news is that the closing has come close to the ATR, right? What was 39,500 and the 20-day moving average of 39,300 or so. Now potentially can take some levels of support. Otherwise, it was almost 1,600 points away over the last couple of days, right? So major point of concern now has been validated, and we can move forward. Let's see how yesterday was. Now, yesterday, as the market was closing, um, sorry, day before, as the market was closing, we moved some of our puts to the calls because of the difference in high IVs. And we expected a small correction. I actually thought that the market may cover this gap. So I thought about 40,300 being a solid support. But this is kind of how the day went. It essentially took out this zone, took out this swing low. I'm going to move the 20-day moving averages out. It took this out, it covered the gap, it continued here, and it moved forward. Now, before I move ahead, this is kind of how our analysis continuously evolves in terms of swings. So this was one of the levels that we were looking like. You see this level, this is where the market took support, swung, came. So we were looking at this level, it broke, and I said, okay, if this is moving, let me look at this gap. But rather than the gap, let me look here, right? So around 40,150 levels is where you can see the market swing, touches, bounces, touches, moves. So again, over here, the market was stable. And again, it broke that as well and took not only this thing out, this zones out as well. So yesterday was one-way action, not a good day for most option sellers. It essentially took this place out and it has come back to this swing level. That's been, this zone is also pretty much done. Right now here, if I look at on an hourly chart and I move out, so you will get a better sense to see how the market is. So this is a place where you see the market coming here on an hourly chart, moving up, coming down as well. Now that's kind of where we are. Now we've got a zone here. I've just not marked it. We've got a small zone here on the hourly chart, right? So I'm going to mark that and move forward. So essentially, this is how the day went. Yesterday or Thursday, Monday, the market, sorry, 2 days ago, which is Tuesday, sorry, the market closed at 48.74, and yesterday, Thursday, the market opened up at 40,915. So it opened up flat and essentially started moving downwards. As it moves downwards, we were moved upwards to calls. Again, there was a difference in the prices, so we did that. So, like I said, we had those trend lines marked. We kept keeping that in check. As those things moved, we kept adjusting our positions. One of the things that we had to notice was straddle that closed the previous day was 1005, and yesterday, Thursday, it opened up at 1030. So more or less the same. But as the market was tanking, overall India VIX was moving up, which is the volatility index, and as it moves up, the premium goes up and the IVs go higher, and essentially the straddle, which opened up at 1030, ended up closing at 1019. So essentially we got no decay through the day, and we had a big volatile move of over 1300 points down. uh, the point of interest was the option chain. You can see that option chains in the beginning of the day, the calls were written at 41,000 and 40,700. Puts were written, this is around 10 o'clock. Puts were written around 40,500 and 40,000. Markets around 40,600 at this level. As it moved lower, the calls moved ahead. So around 1040, which is here, the market, make it chart bigger, right? So 1040 here, the market's at 40,300. calls at 41,000 and 40,500, puts at 40,000. And by about 2 o'clock or so, which is here, the market's at 40,000. Calls were written at 40,500 and puts were not written at 30,500. They were written at 39,000. So there was this constant coverings happening on the put sides, and therefore the market continuously fell. Now, coming back to today, what will be our plan of action? So we've got lots of resistance zones. I'll mark them for tomorrow and keep. See, we've got one here. We've got one. I can see maybe here. So we've got a couple of zones that are there. Oh, we can even mark one here. I'll just check this and validate that. But yeah, I think we've got these as well as a resistance zones. So we'll mark that. So the plan for today is this. We've got positions open for the 3rd. Now all of this was 3rd November. We have to see what happens right now here, right? At this swing low. I'm going to make the hourly chart and get the zones out. What happens at this point? Does the market move up or down and move? Uh, I actually have a feeling after so much, it may actually correct a little bit and then start flattening out, because you can see that there is this swing low here, and there is, so if I were to take hourly charts, again over here is a big 4 candles, approximately half of that I'd take, so about 39,000 or so I would mark, 500 points lower than where we are, and I'd mark this 39,300 odd swing low. So these would be two places I'd mark and see what the market does around here. I, based on some of the other experts that I follow, looking at what they said the market might stay flat, but it's a bearish market suddenly, so I may be on the side of caution, right? So I may hold positions here and start building from here after I see a couple of corrections. So I would like to see maybe 2 consecutive 15-minute green candles to know that I'm on the right path. On another note, over the next 3 days, I'm actually out. I'm traveling, so I won't be trading. My father will be doing most of the trading work. I'll get some information from him so I can continue making the videos. But overall, this is kind of our strategy. I'm back on Wednesday, so I'll continue making videos more actively from Wednesday onwards.